Hey, this is Sasha. Thanks for joining me in today's video. And what I want to do today is just show you a quick little clip, a glimpse, an insight to what we do in the options membership area. So if you're brand new to joining us, we do a lot of things with options. And in this video, I'm going to show you a quick little clip from the members section of what goes on and happens behind the scene. Now keep in mind, this quick clip is just truncated, so it's smaller. Whereas in the member section, you get the full video, and even some of the sessions we go ahead and do them live. So that way you get more insight on in depth. You can ask questions, and we can really cover some of the options topics more heavily, kind of based on the questions that you have and based on the market conditions. Now, if you want to join us in the options membership area, just go ahead and go to our website. You can go to tradersfly.com. And by the way, there we have a getting started page for options. You can also check out some of the freebies here, download a Greeks cheat sheet and much more. And go to the member section by clicking the membership area right there at the top. And that'll forward you to our website where you can see a couple of different memberships that we offer, like options, ideas, and strategies. And you can then click that button to learn more. And there's a video overview of what that membership's all about. Now, I hope you join us. That way you get some more insight, more in depth on your options trading. You can see some other strategies based on market conditions, gives you some ideas how you would manage things, maybe Q&As, and kind of like think of it like a discount Q&A session or a discount coaching session, because you could ask questions directly and I'm more honed in and focused on you. Whereas maybe if we do live events on YouTube, sometimes comments and questions get buried in there, and then you don't really get a chance to a little bit of focus on you. So anyways, hope you join us. Thank you so much. Enjoy this quick little clip as we have in this video, and keep in mind that the members area gets the full version. So I really hope you join us by going to our website at tradersfly.com. As we take a look here, you can see this market here on the diamonds is a real toast. And if you look at the S&P, also not much different here. So we've got a pretty significant problem, actually. So anyways, so as we take a look at these kinds of things, what I want to do is just kind of evaluate what is it that's something I may be looking at in this kind of market condition. So with the market down 2% or so, one of the things that you could be doing is to look at a simple put vertical. Doing something like a put vertical, the reason you may want to do something like this is simply the VIX being at higher levels, you're looking for volatility to kind of come back. So a put vertical is a good way to kind of get outside that range. So if I go into something like the SPX, if you do something short duration, you do have time on your side where the theta decay will be fairly quick. The problem with that is it doesn't mean the volatility will come down. So maybe something, let's say 50 days, 33 days out, something like that might be a little bit more favorable because it gives it about 30 days for volatility to kind of compress. So I might do something around 50 days here. And what I would do is open up my strikes to go to about, let's say 500. That'll open me up to pretty much everything. I could go somewhere around the 10 or 12%, let's say about 12% or even 13. And the reason I might do that is, the market's already pulled back quite a bit. If we were at all-time highs, I might go to 10. Since now we've pulled back a bit, I don't mind going to a 13 or even a 15, because I think it might, bounce eventually. Doesn't mean it'll be today or tomorrow. It just means eventually. So let me go ahead and put this in a different account here. And that way we can, let's say, hide positions. And now what I might do is spread this out, let's say about 30-point difference. I don't want to do just one strike difference, because on the S&P it's just so big that one strike may not be as beneficial of a change. But let's say I do about 5 contracts here. That's about a $13,000 position. So looking at this is something you may want to look into. If you want to normally do about 5 contracts, you might want to start out with just 1 contract for now, and maybe if it keeps going down, maybe add another one. If it keeps going down, maybe add a third, and eventually you could get to like 5. And sometimes those 5 might actually stagger. You might do some here and some here as things kind of continue. So you'll have to see how that goes. For me, what I will do is I'll just put on the full 5 right away. If you don't want to do 5, you could tighten it up, doing about a 10-point difference in between. and that'll help reduce the capital size. So that'll be about less than $5,000. Still quite a bit for some people, but it's definitely a little bit less capital intensive. So anyways, this is kind of one of those ideas right there. If we do get another 100-point down move, you could be down around $300 or so. If you want to cushion it out a little bit, since we're starting this 50 days out, after a few up days, let's say this gets into somewhere around here, you could start putting on some call verticals later on. I wouldn't do that right away because again, the market's sold off quite a bit, so why do it immediately? So I'll just pop this on. This is maybe something that I may look into doing, and I will put that in the IRA account in that area. Let's see if we can get that filled, and that'll be about 50 days out. Boom, filled. So now we are in that S&P position. So I've got that one going and cooking. So as I look into that position, that will be actually my December right there, and I'm starting down, of course, with the bid-ask spread because I rushed the order, but I've got about a 16 theta, looking for it to kind of snap up a little bit. Don't have any risk on the upside. These are things I would look into doing during big downward markets, but again, the problem with this is they can continue to keep moving lower, and if you are worried about them moving even further in lower prices, what you may want to do is more like the hedged strategy that we talked about before. So that would be more along the lines of, let's see, not this one, let's see, all of these, and we will do 1, 2, 3. So we add that extra put right there for some protection. So it'd be kind of this strategy right there where I'm getting an extra put on that November 13th for that protection. So that's the way I would probably approach it in that case. All right, so thank you so much for joining me. I hope you enjoyed this video, quick clip, and some insights on what we do kind of in the members section of the options segment. Keep in mind, if you're brand new to just getting started, go check out the options trading start here section on our website at tradersfly.com, or you could go to the freebies section where you could go ahead and download quite a lot of other cheat sheets, worksheets, mini video courses, and things that I'm working on for you guys. And if you want to join us in the members area, go to the membership section right up here on the navigation bar. You'll be then taken to our members website, and that's where you can see the options, ideas and strategies membership plan, and you can get a big overview of what it's really all about as well with a video there. So thanks again for joining me. Remember to hit subscribe if you're brand new to the YouTube channel, or of course, go ahead and join the newsletter list by clicking the link right over here. And that way you get notified as we release other great videos, courses, products, books, and maybe even join us on our live video session from time to time. Thanks again, and I will see you next time.